Picture this, you check your phone on the way to grab a latte and XRP is flashing triple digits, $100 a pop, and the internet has collectively lost its mind. So here's the crazy part. A lot of very serious sounding people keep telling us that scene will never happen, right? They swear it's mathematically impossible because of something called market capitalization. Now tonight, I'm going to walk you through why that argument is stuck in 2017, how a relatively tiny wave of fresh capital could launch XRP into nose-bleeding territory, and why the next generation of global money plumbing might be hiding right under our noses. So stay with me, because by the end, you might look at every crypto price chart just a little bit differently. So let me set the stage with a quick story. Now, over the weekend, I was hanging out with a buddy who loves to play the market cap police. Now, here's the person who's popped every kind of Reddit thread to kind of remind folks that XRP cannot hit $100 because it would make it bigger than Apple and half of Mars combined. Classic, right? Now, while he was running through the usual math, I pulled up Zillow on my phone and showed him a kind of seaside mansion listed for $10 million. Average US home prices is $300,000, I said. So does that mean that this mansion can't sell? He chuckled, but the penny dropped. That's the whole issue kind of with slapping averages onto exceptions, right? They miss the real dynamics of supply, demand, and what people are willing to pay at the margin. Now, market cap is just price times circulating supply. It sounds very straightforward, but it actually hides a sneaky truth. It is not the pile of actual dollars that traded hands. So imagine a tiny neighborhood yard sale, right? First neighbor sells a single kind of Beanie Baby for $100. Suddenly somebody declares the Beanie Baby market, right, is worth millions because there are thousands of stuffed, attics absolutely everywhere. Now the headline number looks huge, right? But the amount of real cash that actually moved, well, one solitary Benjamin. So crypto works the same way, right? When you see a green candle, it doesn't mean billions just magically poured in. It means the last trade cleared at a higher price and every untouched coin got repriced by association. And here's where it gets spicy. Analyst All Things XRP dug up a jaw-dropping data point. At one point, an $80 million inflow, a kind of rounding error for big institutions, kind of sparked a $17 billion jump in XRP's market cap. Now that's a 200 plus 3 times multiplier, right? How? Because the tokens people actively trade, the liquid float, are a slither of the total supply. Now the rest are kind of chilling in escrow or hanging out in cold storage wallets that only get cracked open for birthdays and bull runs. So fewer sellers equals thinner order books, and thinner order books means a single chunky buy order punches the price straight through the ceiling like the Hulk in a studio apartment. So here's a quick anecdote. Right? I once tried to scoop up a 5-figure stack of XRP in one go. Nothing too crazy. Right? Just wanted to kind of dollar cost average with a bit of flair. Now, the moment that I clicked market buy, the trading interface practically screamed, "Are you sure?" because the slippage forecast doubled in mid-click. Now, that's low liquidity at work, and I felt it kind of in real time. Right? Multiply that effect by a wave of hedge fund money, and you start to see why those $100 dreams aren't so wild. Now, critics fire back with, fine, but even if price can spike, what would sustain it? Where's the real world demand? And I'm glad that you ask, because XRP isn't just a shiny coin to flip on weekends. It was built as kind of the grease for cross-border payments, the boring kind of trenches where banks move trillions of dollars every single day. So picture kind of today's system as a 100-year-old kind of plumbing network. It's slow, it's leaky, it's outrageously expensive. Now XRP is like kind of swapping rusty pipes for fiber optic tubing. Fast settlements, near zero fees, no time zones, no Friday versus weekends. With banking giants and payment corridors already kind of tinkering under the hood, some quietly, some publicly, kind of the addressable kind of flow is kind of mind-boggling. And it doesn't stop there. Developers have stitched XRP into the DeFi quilt, adding EVM-compatible sidechains for your favorite Solidity toys, and opened the door to massive income plays like staking and liquidity pools. Now, every new integration gives traders and institutions another reason to yank coins out of circulation and drop them into locked contracts. Less supply on exchanges, more upward pressure. Simply as kind of breathing. And here's the kicker. All Things XRP crunched the numbers and suggested that a relatively tame $8 billion inflow could shove price into $30 to $40 range. Now, that's kind of before we even factor in the monster catalyst that everyone's whispering about, an ETF stamp of approval. Now, a proper bull market frenzy, or a kind of clutch of institutional banks deciding they're done playing 10-figure Swift fees for, every kind of quarter, well, those stacks, dominoes, and of course, $100 tiles suddenly look a lot less lonely down the line. But hold on. There is an elephant tap dancing in the room. Now, at $100, XRP's market cap would clock in at roughly $5.8 trillion. That's outrageous, I hear the skeptics yell, pointing to Apple at $3 trillion or Bitcoin at just under $2 trillion. Yet, look back 12 years and Bitcoin itself was trading at $100. And, with a kind of tiny market cap of near $1 billion. Smaller than some Series A startups today. Now, anyone kind of shouting from the rooftops that BTC could never kind of clear $1 trillion looked kind of perfectly reasonable until it actually did. Now, paradigm shifts look impossible right up until they become your kind of phone's lock screen notification. And here's a fun thought experiment for you, right? The global cross-border payments market is about $300 trillion annually. Yes, with a T, right? Now, if XRP snagged just 0.5%, right? So 0.5% of that flow on a rolling basis, the daily clearance volume would tower over the entire supply like Godzilla over a garden shed. Now, value has to root somewhere, right? The less liquid the token, the faster price zips upwards to kind of coax holders into kind of parting with their stash. That's Economics 101 wearing a crypto hoodie. And because my inbox will explode if I don't say it, no, I'm not promising 6 trillion caps, by next Thursday's brunch, right? Markets swing, narratives change, regulators wake up on the wrong side of the bed. I'm saying the mathematical door isn't locked, right? It's not even kind of latched, right? Most people just never bothered to actually turn the handle. Which brings us to the real challenge baked into this article then, which is perception. Right, we grew up with, tidy models where you multiply price by supply and you call it a day. But decentralized assets don't play by textbook rules, right? Liquidity, velocity, utility. Now, those shape the table. And if the table legs extend tomorrow because a global bank's consortium kind of flipped the on switch, then every calculation done on Monday evening is out of date by Tuesday's sunrise. There was a moment during 2021 run where the entire market learned this lesson on a smaller scale. Meme coins with toothpicks liquidity did 6,000% moonshots off pocket change marketing budgets, right? People laughed, cried, bragged, and lost sleep, right? Underneath the kind of circus lights was the same multiplier math. Thin order books, fresh demand, kaboom, right? XRP simply has the added tailwind of industrial kind of adoption rather than cartoon dogs, which might make the explosion a lot less random when it actually finally rips. Now, let's widen the lens. Imagine a world where your payroll, your mortgage, and your coffee shop all settle through tokenized rails. Now, if XRP becomes a savings account for 10 minutes, literally the time that it takes to swap euros for rupees, the sheer throughput could dwarf today's speculative volume by a mile. And remember, only roughly 5% of coins are actually up for grabs on the open market right now. Every fresh corporate integration is like inviting a sumo wrestler to jump on one side of a seesaw that already had a toddler sitting on the other. Now, prices, they don't just rise, they catapult at this point. And speaking of invitations, before we kind of sail further here, quick heads up, we dive into these kind of market mechanics every day inside our free crypto Discord server. There's a link chilling in the description down below. And if you want live charts, bad puns, and people who actually reply faster than your kind of toaster pops, come and say hi. All right, so back to the fireworks. The climax of this narrative hits when you realize that the number that really matters isn't $5.8 trillion. It's additional dollars needed to spark the run. Now, if 80 kind of million can pump 17 billion in market cap, then how many cycles of that do we need to actually cross $100? Roughly 3 to 4 billion kind of raises the actual capital that could nudge XRP close to half of its long-term dream range. Now that is lunch money sized for an asset manager who kind of juggles mid-cap equities for retirement funds. And here's another lens, right? The entire gold market is worth around kind of $15 trillion. Gold doesn't move at the speed of an email, doesn't settle in 4 seconds, and definitely can't be diced into micropayments for your gaming avatar. Now, I'm not calling XRP digital gold, right? We've already heard that one before, but value inevitably drifts towards assets that solve real pain points, and cross-border settlement is a migraine that has kept CFOs up for decades. Okay, so let's cool the jets for a second, because optimism without honesty is just marketing fluff. There are going to be hurdles. Regulatory limbo can freeze adoption. Ripple's legal battles have kind of resembled a Netflix series with too many kind of cliffhangers. Competitors are sharpening knives, Stellar, the CBDC pilots, and legacy rails kind of reinventing themselves. And of course, the market could collectively shrug and chase the next shiny token. But that's the tension that makes the story so gripping. Great opportunities hide inside messy narratives. If everything were obvious, gains would already be priced in, and we'd be eating cold pizza instead of scanning price alerts at 2 a.m. So, where does that leave us then? With a myth that deserves to be buried? My market cap is a snapshot filter, right? Handy for quick impressions, but not a mirror of reality. Liquidity, demand, catalyst, and hardwired utility paint a deeper picture. When analysts dismiss a $100 XRP because the headline number feels too big, they're ignoring the snowball physics of thin supply and modern finance plugging into blockchain rails. Just think back to our mansion analogy, right? Just because most houses list for $300,000 doesn't block a famous athlete from snagging a penthouse for $50 million, right? Price is set at the edges, not the averages, right? Crypto, being global and open 24/7, lives on the edges. So time for a quick recap before we wrap up. 1. Market cap is not a ceiling. Liquidity is the lever. 2. Right, XRP's traded float is tiny, so new dollars get multiplied like gremlins after midnight. 3. Cross-border payments represents a $300 trillion river waiting for better plumbing. 4. Right? Even a single-digit billion-dollar inflow could crack open the door to 30, 40, and potentially triple-digit territory. And 5. The only impossible label in finance lives in hindsight. So if the idea of a $100 XRP still sounds delusional, that's fine. Skepticism keeps markets honest. Just remember the internet was called a fad. Electric cars were toys, and Bitcoin at $100 was apparently the top, right? The future doesn't read our spreadsheets before it actually shows up.